Well, this conflict in the Middle East has no doubt pushed oil prices higher. We're feeling it everywhere. We're getting a fresh economic look at the data here at home today. Jobless claims, that's new filings for unemployment, came in right in on target, around 210,000. That's still signaling a stable, healthy labor market. But here's a shift. So since oil has surged more than 30% since the Iran war began, what's now driving inflation fears? It's driving inflation fears and a market volatility. So is this really just a short-term pressure problem, or is this start of something bigger? Let's bring in Dale Smothers, President and CEO of RDS Wealth Management. Dale, good to see you. So jobless claims today came in right on target. What does that say about the economy right now?
I think that the jobless claims coming in right on target really tell us that the jobs market is not falling off of a cliff, and some would have you to believe that early on until now. The narrative shifts to inflation is going to go off the charts because of the price of oil. Now, granted, Alicia, if oil stays at $90 to $100 a barrel for 3 months, 6 months, inflation will go higher. But I think that we see this being a short-lived pressure on the market. I think that oil comes back to $60 or even $70 a barrel, perhaps lower even than what we saw just 6 months ago. And I think Scott Bessent's take was an interesting take that you just played there. The fact that if oil was at $60 a barrel and inflation was where it was and the sense of security was where it was, it's only going to be better when a terrorist regime like Iran is no longer a threat to the global economy. And this is a perfect point, and I subscribe to that as well.
So it's obvious if energy stays high, that'll hit inflation. It'll make inflation go up. That'll hit consumers. But let's say the Strait of Hormuz opens today. Do energy prices drop like a rock or like a feather?
Yeah, oil prices drop like a rock, in our opinion. And we've seen a little bit of this just from a Donald Trump Truth Social post. We saw the oil price fall and we saw the market rise. This type of movement is creating a lot of volatility. But right now, volatility in the market is the price of admission. This is the tricky part for the Fed, though. The Fed has to keep this high wire act going just a little bit longer, because they have a dual mandate, as you know, Alicia. It's not just about labor, it's about inflation. And if inflation is higher for the first time in a long time, if there's even a thought of inflation being higher, we are going to hear about rate hikes. And no one wants that, especially the consumer, because affordability is already a crisis in America. This is going to be a midterm election news a point of contention as well.
Yeah.
And so I think that the administration is going to do everything they can to get this price of oil lower. We've talked even about the potential for some sort of export ban. Who knows exactly how, but I do foresee quickly the price of oil coming down, and we would pray that it is all because of the Strait of Hormuz being opened and a national coalition of nations really keeping that Strait of Hormuz open.
Okay, so if the strait does open, best case scenario, right, it opens right away. No lingering effects before the midterms?
Yeah, I think if the strait opens, there would be no real lingering effects, especially in the market. The market's going to behave very favorably with this. The market could find all-time highs before midterms, but midterms brings its own volatility. Labor will soon, once again, be the focus of the Fed, because I think inflation is not the primary focus here. It will be if the strait doesn't open, but like you said, if the strait opens soon, inflation and oil go back to where they were.
No one has a crystal ball. We don't know what's going to happen. But if jobs weaken, we know the Fed cuts rates, and if inflation hikes, they hike rates. So which side of that equation do you think we're heading towards? I know you don't have a crystal ball, but in your professional opinion.
Sure. I think that very quick, in short order, especially after we get our new Fed chair, Kevin Warsh, I think that rate cuts become the narrative that we subscribe to in the Fed. And we see by the end of the year, 1, maybe 2 additional rate cuts coming in the future.
Okay, we're hoping for that. Dale Smothers, President and CEO of RDS Wealth Management. Thank you for your time today.
Thank you, Alicia.
You got it.